If you blink right now, you'll miss the exact moment silver stops being just another metal and begins rewriting the entire precious metals playbook. This isn't some sleepy once-a-decade rally anymore. It's a full-blown structural shift accelerating faster than most can track. Silver didn't merely cross $100 per ounce on Friday. It blasted through with real force, hitting highs around $103 to $104 today, Sunday, January 25, 2026. That's a massive leap from just weeks ago, with spot now trading firmly above $103 after closing near $103 late last week. The momentum feels unstoppable, and the fire is spreading globally. Wherever you are, drop a comment immediately. What time is it for you right now, and have you checked your local dealer premiums or availability yet? Let's prove how worldwide this squeeze really is. The flashy headline gets eyes, but the deeper, more dangerous truth is what matters for anyone still on the sidelines. Silver's surge isn't fueled by memes, hype, or short-term speculation alone. It's rooted in a screaming physical market tightness clashing against a paper market that keeps pretending abundance exists. On COMEX, the main Western benchmark, inventories have drained sharply. Registered stocks, deliverable metal, dropped significantly in recent weeks, with overall warehouse levels falling from peaks last year toward lower figures around 418 million ounces after heavy outflows. Delivery notices and standing for delivery requests have spiked repeatedly, pulling real metal out of the system. In Asia and other high-consumption regions, buyers are paying meaningful premiums for immediate physical silver, coins, bars, whatever's in hand, not just futures contracts. That regional gap isn't noise, it's a clear warning. Physical availability is tightening fast, and true arbitrage, shipping metal to close the spread, doesn't happen instantly. Logistics, customs, financing costs, export rules, and timing create real friction that lets premiums persist longer than theory suggests. Two unstoppable engines power this move. First, industrial demand that shows no signs of slowing. Silver is essential for conductivity and reliability in solar panels, electric vehicles, 5G infrastructure, AI data centers, grid expansions, battery tech, and countless electronics. Electrification and the green AI economy aren't optional trends. They're structural necessities. Factories and manufacturers can't just pause orders when prices spike. Production lines keep running, creating sticky, non-discretionary pull. Second, investment demand is shifting from passive exposure, ETFs, futures, to active grabbing of real metal. Stackers, institutions, and high-net-worth buyers want tangible bars and coins they control, not paper promises. When both sides compete for the same limited pool, pressure builds exponentially. The supply side tells the uncomfortable story. Silver has run structural deficits for years, demand outpacing mine output plus recycling since at least 2021, with the gap widening. Global mine production averages only around 800 to 900 million ounces annually, but a large portion, over 70%, comes as a byproduct of copper, zinc, lead, and gold mining. Silver price rallies don't automatically trigger a flood of new primary silver mines. Economics of the host metals often dictate output more than silver's chart. New projects face 5–10+ years from discovery through exploration, permitting, financing, construction, and ramp-up. Low prices in prior years meant underinvestment in exploration. Today's demand slams into yesterday's thin pipeline. Recycling helps. Higher prices shake loose scrap, but it's not infinite. The easiest, highest-grade scrap gets recovered first. Deeper or lower-grade sources cost more and take longer. Above-ground stocks act as the buffer, but reservoirs feel endless until they suddenly don't. Ignore the tired "it's overbought" chorus. Yes, silver has surged over 40% in recent weeks and more than 200% over the past year, looking technically stretched on charts. But technical overbought conditions don't kill genuine structural bull markets. They create healthy shakeouts. Pullbacks flush leverage, test conviction, transfer metal from weak to strong hands, and often precede the next leg higher. The gold-silver ratio has compressed aggressively, now hovering around 48:1, as gold sits near $4,988, $5,000, while silver pushes 103 plus. Historically, when the ratio tightens below 50-60 during physical stress, silver tends to outperform gold violently as capital hunts catch up potential. So what's likely next week, starting Monday, January 26, 2026? Realistic scenarios based on today's signals, no hype, just probabilities and what to watch. And base case, most probable, momentum builds steadily. Industrial orders continue pulling. Asian physical demand remains elevated. COMEX faces ongoing delivery pressure and further inventory draws. Silver grinds higher through the week, potentially testing 110 plus, with intra-week volatility providing sharp but ultimately buyable dips, 5–10% pullbacks mid-week, that clear week longs and leveraged positions. Regional premiums could widen further, dragging the global benchmark upward to align with real-world scarcity. Bearish shakeout scenario. Macro trigger. A sudden dollar spike, hotter than expected rate data, or broader risk-off move hits commodities. Silver could flush 10 to 15% lower early in the week, creating headlines screaming bubble burst and bearish capitulation. But if core physical signals hold firm, premiums stable or rising, dealer availability tight, delivery requests elevated, the dip turns into high-conviction buying fuel. Patient accumulators step in aggressively, setting up a ferocious rebound by Thursday-Friday that erases losses and pushes new highs. Wildcard nuclear scenario. Delivery stress accelerates. A major player, or cluster of them, stands for delivery on big contracts, or unexpected physical settlement demands surge. The paper-to-physical illusion cracks visibly. Volatility explodes with 10-20 plazas daily swings possible. Silver sprints higher in chaotic fashion, stumbles on profit-taking or margin calls, then snaps to fresh levels as the system proves it can't deliver smoothly. The longer multi-year deficits persist, and new supply remains years away, the path of least resistance stays upward, violent breathing room included. Bottom line, this battle is no longer bulls versus bears. It's real-world industrial and monetary necessity versus financial paper games. Price itself is the megaphone. Higher levels force mainstream attention, draw more capital, and stress the constrained system further. If gold holds its strength near $5,000 and the ratio keeps compressing while supply lags, silver has clear room to run much harder. Key signals to monitor this week. COMEX daily, weekly inventory reports and delivery notices. Big drops or spikes signal real urgency. Regional dealer premiums, product availability, and shipping delays. If they blow out, the benchmark must chase reality. Gold-silver ratio, sustained moves below 48.50 could spark explosive catch-up buying. Macro catalysts, dollar index, Fed rate expectations, liquidity flows, geopolitical headlines. If you stacked physical early, held miners through multi-year boredom, timed entries well, or profited big in this cycle, share your real win in the comments below. Not to brag, but to inspire the viewer who's doubting whether patience actually pays off. And answer this. What do you think drives silver's next major leg? Relentless industrial hunger, a broader monetary confidence shift, or a classic paper-to-physical delivery squeeze? Debate it. The discussion sharpens everyone. If this detailed breakdown helps you stay ahead in a market moving this fast, hit subscribe now. You don't want to miss the next chapter. Things accelerate too quickly for anyone to catch up later. This is strictly for education and entertainment, not financial advice. Always do your own due diligence, manage position size and risk carefully, and consult qualified professionals before acting. The prepared stay calm and compound. The impatient get shaken out. Where do you stand right now? Drop it in the comments. We're building this community together. See you in the next update. This story is heating up fast.